What's up, guys? Welcome back to the Modern Craftsman Monday.
It's Monday. I'm going to be up in Providence this week.
Dang, what are you doing up in Providence?
Little expo that I'm coming to hang out with you guys
Little.
in the Rhode Island Convention Center.
Oh, yeah?
I think it's on Thursday.
It is. Well, if you live and work in the Northeast and have some questions for the folks
Oh,
at
yeah.
Duration, they're going to be there as well. A great opportunity on Wednesday, Thursday, December 8th and 9th to talk to Duration as well as us. We're going to be, like Tyler said, we'll be there Thursday. So join us and Duration at the LBM Expo at the Rhode Island Convention Center. Also stop by and say hello to us on Thursday afternoon as we podcast from the show floor. In the meantime, if you want more information about Duration's unbelievable offerings and Poly Ash, please visit their website at durationmillwork.com and be sure to check them out on Instagram. We haven't even told you what we're talking about today. Maybe that's strategic, maybe it's not. Who knows? Maybe we just want to see you in person. We're excited about this live event. So, yeah, seriously, if you guys are in the area, swing by. We will be there on Thursday. We got some cool stuff going on. But this week, it's our largest podcast ever.
Yeah, I can't introduce anyone because I came on late, so I don't know who anyone is. I just kind of hopped in the conversation.
You know what? We are going to talk to an asset.
We're going to talk to a woman and two men.
So they are tax strategists and asset strategists. So wealth management. And before you guys turn this off, before you guys say, no, this isn't for me, give it 10 minutes. And we're going to break into things that truly will hit home, will really, resonate with, a lot of you guys. I know for me, it was something that I continued to put on the back burner. I spent years with a CPA that was just doing my taxes, not helping me strategize. And it came down to the TikTok social media that I started learning about these strategies that I could be taking advantage of, which led me to letting go of my CPA and working with someone that was going to work on my side of things.
And you found them on TikTok.
I did not find him on TikTok. I
Oh.
thought about it, but when I interviewed him, I threw this thing out. I was like, "Hey, I heard blah 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 blah," and he laughed. We were on a Zoom call, and he goes, "Did you see that on TikTok?" I was like, "I did,"
Yeah.
and he goes, "It's true." I'm like, "I know it's true. This is the crazy thing. Like, why is no one telling me this except for this character that has this like white sheet of paper behind him?" He's like, "Here's how you hire your 8-year-old," and I was like, "What? I don't have an 8-year-old yet, but when she went on her
I'm interested.
8th birthday, hey, you're coming to work."
But if you listen to the podcast, which you should, and also you should leave a review. But if you listen to the podcast, they will give you some advice as to how to find a CPA or somebody to kind of handle your financial investments.
And
So,
that's huge because that's like everyone's like, "Well, I understand I should do this, but I don't know where do I start?"
yeah.
And we also dig into some of the best investments for people in the trades towards the end of this podcast. So this one, there's a lot of good information. We're going to also set up a micro link to start this conversation. So if you guys have questions specific to tax and asset management, we'll share the link. It's in the bio below, and we'll share it on our social media. But no dumb questions here. I want everyone to join that. Ask the questions that you've been thinking about, and let's get that conversation buzzing. They've committed to answering all of our questions. I'm not sure they quite know how many people might hop in there, but let's see what we can do. This podcast is also brought to you by Rental Run. So, Tyler.
They stopped emailing me.
So we've done our job, guys.
Sorry. All right. So I forget if I'm doing the beep or the burnout. I think you were supposed to do the beep.
Beep.
Yeah. No, it's like more of like a beep beep.
So we're creating a sonic brand for Rental Run. They don't know about this. They're about to find out. They're like, their marketing team right now is like, "Guys, are you listening to this? They've come up with a sonic brand. It's awesome. It's a beep beep and then a burnout." And then their safety guys like, "No, we can't do burnouts in the vans, guys."
Yeah.
And all their guys driving the vans right now are like sitting in Home Depot parking lot.
We got the green light to burn out.
Breaking the gas like to the floor. It's like it's not doing anything. And then it's like they get 6 of them with busted transmissions, and we're on the hook for it, and we need more sponsors to pay for the. No, I'm just kidding.
It's bad. No, Reno Run. I feel like their outreach, they're spreading. So they're in Philly now,
They are
which
growing.
is cool. Chicago, Boston,
Mm-hmm. Canada.
Canada. So basically, they will make a run to a big box store for you if you don't feel like sending an employee. Realistically, a lot of times it does not make sense to pull somebody off a job where they can be getting work done. Generally speaking, I would say, unless it's an emergency, if you can keep somebody on a job, they can, get busy doing something else until that material or, supplies arrive. Stay busy. You don't have to pull somebody off a job, and then that delivery should come to you. I think that they're saying, as quick as 2 hours.
Yeah, with coffee.
Yeah, with coffee. They're gonna be like, "Yo, stop telling people that we're bringing coffee."
We are running
Um,
out of coffee. You know what would be a
no, but
great opportunity for someone that has a killer coffee brand that wants to get some outreach?
yeah,
Reach out to Rent a Run.
exactly.
And if you want
Um,
free delivery, podcast.rentarun.com/Modern Craftsman,
yeah, and then they know that it came from the podcast,
which is
which helps us
huge.
out too. It validates their sponsorship with us. But no, think about it. If even if you work alone and you don't want to be making a run to the hardware store or a big box store, they can run and pick up stuff for you. If you have a single employee, you don't want to pull somebody off a job, keep somebody on a job. Dude, for me, if you're like sitting there and you have inspections, and there's so many times where I'm like, oh, I could be getting this, this, and this done, I would plant myself on a job for inspections and just get a material
Mhm.
list and then have them drop it off for me. So if you haven't tried it, look them up, give them a shout. You can get it's free delivery that they're offering.
Yeah, so podcast.rentalrun.com/Modern Craftsman, and the first order delivery is on us. So we need introductions because I think this is the first time that we will have 6 people on this podcast. So
Breaking records.
everyone that's listening right now needs to specifically listen to the tone of the voice and the introduction. So as we go through this
No, you're
podcast,
good.
we'll know who everyone is. So I'll turn it over. Sherri, let's start with you.
I'm Sherri Mahoney with Taxing Matters. I have a tax office in Westport, Massachusetts, and another one in Orleans on the Cape. I've been in business for 35 years and specialize in small business individuals and individuals with investments. I have lots of contractor clients. And right now, what we're doing is lots of strategizing for ways that people can make purchases and do things before year end in order to save some money on their taxes for when we do the filings for next year. So that's a pretty big deal for us right now. Strategizing is pretty empowering in terms of knowing where you're at tax liability wise and what types of things we can do to lower that, whether it's through vehicle equipment purchases or retirement funding. We do a lot of working with brokers in terms of looking at what they have for capital gains and what types of things we can try to possibly capture losses and things like that to offset gains. So it's a busy time of year right now for us.
Very cool.
Very
And then,
good.
gentlemen,
And I am Bill Oneill, and this is John Gentry. We're with Asset Strategy. We are an asset management firm. We're here in Natick, Massachusetts. We too have been in business for just over 30 years. We have a couple pillars on our stool here. We work in private wealth, 401ks for businesses like contractors and any others. We also do capital gains strategies, so 1031 exchanges for anyone who owns income property out there. We do quite a bit of business in that area. We can get into that with regards to DSTs and ozones. And then we're a marketing-centric firm as well. We have a full studio. You're seeing part of it. We have another production studio with our own podcast center and a video production area and a full marketing team. So we value that. John Gentry is the head of retirement.
So, and at this time of the year, we're also talking to quite a few sole proprietors, small contracting firms, especially the sole proprietors who are looking for that year-end tax reduction strategy. And sometimes, we're talking to someone who maybe instead of buying another piece of equipment that they can expense all at once, we're having a conversation of when you rather put 50,000 tax deductible in your personal retirement plan instead, since your truck is only 2 years old, you don't really need a new truck yet. And this way you're going to have that money in your retirement account. You're going to get the same kind of deduction, and you just have to get the paperwork done to set up a new plan like that before the end of December, and then you get until tax filing to actually come up with the cash for the contribution. So again, at year end, we've got a few smaller clients like that who have not set up a plan and have been talking about it for years, and we're trying to get them to do that so they can start to accumulate some investable assets in a retirement account and reduce taxes for the current year. More central to our practice is consulting to retirement plans between 10 and 100 employees, consulting on the investment menu and giving advice to the plan participants about how to properly save and invest for retirement.
So, anytime that I've had a conversation around taxes, retirement, setting ourselves up, wealth management, you threw around some numbers there that means nothing to me. And you're smiling because you know that you did that. But it's like, that's always the overwhelming aspect of this. There's so many avenues. Like you hear the most common thing is like at the end of the year, it's like, should I buy a truck? Should I buy a piece of equipment? I got to write something off before the end of the year. And, I spent early years of my business with a CPA that didn't really help me strategize, and it was really frustrating where I basically had this huge tax liability come April 14th that I had to pay the next day, and it was like I didn't have that cash sitting around, and it was like I wanted to get into strategy, and only recently started working with someone that was focused on the strategy side of it. But it's you talk about having the marketing centric side of your business, the video and the podcast. I was going to bring this up later, but since you touched on that, I am learning so much good and bad tax information on TikTok. and it sounds ridiculous, right? But I'm sitting and I follow these tax strategy guys, and they talk about all of these strategies, and I go back to my CPA and I'm like, hey, so I heard that I could hire my 8-year-old that comes into my office for 4 hours a month, and I can pay them quote unquote $18,000 a year, and I can defer it. Like all of these, I don't want to call them loopholes because I don't think that's the right term, but all of these opportunities to defer tax or to, like you said, rather than buying a truck, you're putting $50,000 into a retirement fund. But it's an overwhelming amount of information. And what I'm hoping to gain from this conversation with the three of you guys is how to simplify that conversation in kind of best practice and the right way to go about, hey, should I be hiring someone, or what portions of these things can I do on my own? You have photos, and I was joking earlier, but like you have photos behind you, like showing Bitcoin. It's like, that's really big right now. Cryptocurrency. It's like, you guys are obviously consulting on that. I would assume in some way or fashion, but the overwhelming amount of information, like I said, on TikTok, there's a lot of bad information, social media in general, there's a lot of bad information, but there is a lot of good, and helping to decipher that and kind of carve out the right path, and kind of like I said, the best practices I'm hoping to gain kind of from this conversation.
I'll speak to that if I can. And, I think that you're totally correct that there is a lot of bad information out there, and you have to be careful because, I spoke with a realtor client last week who called and said, I just watched a podcast and I'm going to buy this rental property and I'm going to expense the whole thing this year on the taxes next year. Total misinformation in terms of what her plans were. But the plan was already in the works.
Mhm.
So you have to be careful. There's a lot of bad information out there. And what you want to do is work with somebody where you can get good sound information, because so much of what's floating out there right now is, if it's, and I hate to say this, but if it sounds too good to be true, a lot of times it really is. And there's also that mythical idea where, this is all so overwhelming and it's all over my head. I'll never understand any of this. And I think that almost anybody that has a business needs to learn about taxes. And it's not that difficult. It's not hard. When I have new clients that are starting a business, we start one step at a time, and every year is about educating people in terms of what their deductions are, how to maximize those deductions, and tax planning should be part of that. Like, I don't ever want a client, at tax time to be, shocked at a huge tax bill. We work during the year and saying, okay, how's your year going? What can we do to offset some of that tax liability? And the diversification piece, which is, yes, maybe a new truck before the end of the year, but also retirement. It's looking at the whole picture, not just one piece of it. There's some really great things we can do in terms of strategizing.
Yeah, and I would echo that. Managing your tax liability and avoiding as much tax as you can appropriately and within the lines is much more effective strategy than taking excessive risk or really, reaching beyond the intent of the law and hoping that you're going to be okay. That kind of reaching isn't worth it. And then, one of the tax strategies that we use when we're doing retirement plan design work is to try to measure the costs of sponsoring a plan, administration, record keeping, investment expense, investment advice, and the cost of making contributions for any employees you have that are eligible for that plan relative to the taxes that you can save. And with a small business of 10 or 15 people, there are a lot of situations where we can save the owners more in income taxes than it costs them to run the plan, including the money they give in contributions to their employees. So a really well-designed retirement plan for a contracting business has a true net to the bottom line result when you do that calculation. I just got off the phone with a client who was concerned about a new employee just became eligible, and he has both a profit sharing and a pension plan, and he's going to have to make a contribution for this employee. Well, the plan contributions save him over $50,000 a year in tax, and he's going to have to make a $7,000 contribution for this employee. So, yeah, that means the plan doesn't work as well as it did when he was the sole proprietor, because he has to make a contribution for that employee. But he's still saving 7 times as much in tax as he's spending on the cost of the plan. So he's way ahead of the game because the plan was designed well for the objectives that he had.
You know what, and I think this is, I don't want this to come off the wrong way, but I feel like the conversation around taxation and avoiding taxes and deferring taxes and all of that, it, in my terms, and like simply put, it is daunting when you don't understand it. Sherri, I understand that it's relatively easy to learn, and everyone in business should learn taxes. I totally agree with that. I have not learned, the strategy to, any extent. I'm learning it now. But I think about this a lot in the sense that it is, when you don't understand it, it's very daunting and it's very difficult. And oftentimes you hear about the wealthy, or like, I'm not going to get into the politics of it, but like tax the rich, right? And it's, well, they have the resources, in other words, money, to hire people such as tax strategists, wealth management professionals such as yourselves, or your occupation, to help with that. And the difficult part is when you are starting a business, you're usually cash strapped, at least in our industry, right? We're so tight that the last thing that that we are thinking about, not that we don't want to, the last thing that we're allocating funds to is someone that can help us with the tax strategy, which I'm well aware. Like the sales pitches I've had from tax people is like, listen, you're going to spend 15 grand a year on me and I'm going to save you $50,000 a year. That sounds great. Hey, I saved $45,000 by paying 15 grand. Now I understand that. I guess my point is, in my defense for the people that aren't doing it, is how do we make this, I guess, two questions.
More of a priority,
but also like the bigger issue in my mind is that it is so complicated from the outside looking in when you don't understand it, that people avoid it. Like Sherri, you said, like people avoid it because they don't understand it. Where, when I'm going through passive house training right now, like super energy efficient homes.
Humble brag.
Humble brag. I'll drop a few of those through here. But the point is people avoid doing that because it's so complicated. They build to the code minimum. When codes get more strict and more difficult, people choose, to be oblivious to it and like, oh, I didn't know, like they pretend they didn't know that existed. And it really does stem back to when people don't understand or, don't feel as though they can understand it, they avoid it. And, good.
Nick, yeah. And, Nick, I think part of what you're talking about isn't the information itself, the answers themselves, but it's the access to that information and the access to the answers. I should have said at the top of the introductions, I was a contractor for 12 years. I had my own contracting business. I had dirt under my fingernails for well over a decade. And I'm familiar with what I'll call the lonely feeling of the guy who's in the office at the end of the day, at the end of the year, and at tax time when you have to break out your checkbook. And when you know it. And I just remember that lonely feeling of not knowing even who I could ask. I didn't have access to the information, and it was less that the information was daunting, and it was more that it was just out of reach. Mm-hmm. I didn't have that one guy I could call up or gal and say, hey, this is on my mind and I don't know what the right thing to do is. What do I do?
But do you think I'm using air quotes, the system is set up that way where it is out of reach for the majority of people?
There's a lack of communication from firms like ours to reach into firms like yours, and all the listeners, right? So that's a truthful answer. But I can tell you what, and I'm going to make an offer at the end of this, something that John and I are doing on the retirement side. So we set up 401k accounts for companies, right? Some are small, some are large. We have the valuable opportunity to talk to all the decision makers that hire us to manage that plan. But the people who are the participants in the plan are the ones who have that similar feeling of some of the information's out of reach. So we've noticed that, and because we are communications driven and marketing driven and everything else, we have the capability in-house to do something that we're kind of proud of. We've just started setting up what we call microsites for the participants, or for each company that we work with. We'll set up a microsite that is specific to them. It hosts specific information that is geared, very specifically to their situation, their needs, their questions that they might have as a group or as individuals. And we also have provided access to our, in this case, calendars to book appointments with us and ask those questions. So that shortens the throw of what you're talking about. Now you don't have to sit alone anymore and say, I don't know, should I be doing more Roth or should I be doing more? Whatever that question is, they can book a 15-minute conversation with us. I'm quickly arriving at, I think it would be cool to try to set up a microsite for your podcast. And we can't really book our calendars with that, but I can set up almost like a chat room. And when I say that we will monitor it, we're very good at that.
Yeah.
And we could give your listeners an opportunity to pose questions for John, myself, any of the private wealth people, and we'll include Sherri in the mix if she wants to. And I think from now until the end of the year, we could keep like sort of a portal open, see if that's something that people like to take advantage of, and it might take that pain out of not knowing and not having that access.
Well, I joked about the TikTok thing, but that's why I ended up firing my CPA.
Right.
Because I was being educated by people that, again, good and bad, but I was listening and I'm like, there's people out here that want to educate, such as yourself. You're talking about setting a microsite up, and just the fact that you're doing a podcast and video, I haven't not experienced the Discord social media side, but there's a Discord where it's like perfect for these like discussions. They're like the microsite, but it's, I think it's a generous offer, and I'd love to see that unfold, because when the opportunity is there to ask questions and there's really no worry of there's no stupid questions, like, again, it's like, should I be, I'm a sole proprietor, should I have a 401k, or should I be investing my money elsewhere, and being able to do it for yourself, but as you grow as a business, also offer that to your team.
You know what's tough is that a lot of times, and a lot of people that are listening to this, they're just trying to get paid, like week to week, and to try and make salaries or hit payroll or whatever it is, whether it's a sole proprietor or you have a 3-person company or a 10-person company. It's still in the back of your mind every 2 weeks, payroll. So I think, Sherri, when you said like you should learn about, I would love to learn about everything that I do. And try and master it. But then at the same token, I'm like, I would love to know. I have lawyers. I have small lawyers for doing our contracts. I have lawyers for litigation. I have lawyers for whatever it is to protect me, because it wasn't that I know I needed them. I knew I wanted to protect myself and I wanted to have my rights protected. So same thing. I feel like I know I want to save money, and I know there's options for me to save money for doing taxes the right way. But at the same point, I think the low-hanging fruit is, let me just get a CPA, and I just want my taxes done, so I don't have any fees. I don't have any late fees. I'm just talking out loud. Is that so often it's not, we don't have the spare time, or I don't even get to the doctors or the dentist. I'm not going to lie to you. Like, it's like, I would love to get to you guys more and sit down with you guys more. I try and have a call with my CPA all the time, but then I get on the call and my mind isn't clear. I'm not present. Like, it's like being home with our kids. Like, I want to unplug. My mind's middle of the day. I'm racing. Like, what else am I supposed to do? My phone's going off. So I guess my point is, when I first started my company, I told everyone the 2 things I picked up first was having a lawyer or retainer and having a CPA to review my books and see what's going on. So that way it's not a surprise and they know what's up and they have an eye on it, because I don't want to have, if I had to learn everything to be a lawyer, to know what my rights are for that, it would be years. So I'm just going to try and find the right one and know my rights and understand those. So what's the boilerplate and like bullet points that people should be looking for?
Right.
That was my question.
I think at the end of the day, and my husband's a plumber, so I get all of that.
So you guys are rich.
Well, we're
Asset
busy.
management.
We're very busy. A lot of times what I've heard over the years is, I'd rather go to the dentist than get my taxes done, right? I mean, there's this inherent dread of nobody wants to get their taxes done. And, there's also in my industry, there's a lot of CPAs and accountants that say, why would you want to bother to educate your clients? Then they can do what you can do for them. That's not what we're here to do. We don't want to educate them. But at the same time, I think that there's important things that clients need to know. They need to know how they're taxed, why they're taxed, what tax bracket they're in. You don't need to know every little piece about how your tax return gets done, But if I tell you that you're in a higher tax bracket and you're paying 44% tax, that's a lot of information in terms of, okay, do I want to fund retirement? Do I want to make purchases? All you need to know are highlights. And if we can give you that little bit of information, then you're going to make some good decisions.
No, you're absolutely right. It's the same as doing insurance. Nick and I talk about it all the time. It's like, what are you paying for a rate? And and then Nick will be like, well, they count me as carpenters. And in that conversation, it won't go anywhere, but I'll be like, turn to my insurance guy and be like, what's my category? I didn't even know that there was categories. I signed up for I paid the $8,000 and then I know what my overall fee is. And my goal at that moment was to have liability and workman's comp. That's my only goal. And I think so many people this conversation is like, I want to know more of that. That's why I want to have you guys on, because it's like, if we can get into those things that, hey, I need to ask these questions to my CPA to understand if they're even thinking of these things.
Right. And so, when we say this all the time, when you're self-employed or you own your own business, you're in a bubble because you're head of accounts receivable, your accounts payable, you're handling all of your collections, you're out there selling jobs. What you need to do is put together a team. And that CPA that's part of your team should be filling you in on the pieces, the highlights of what you need to know, because they're part of your team. I've had clients that have come in after being self-employed for 20 or more years and never know that they're paying self-employment or Social Security tax, and that rate is 15.3% and where it is on their tax return. And it takes me 2 minutes to show them that and explain it to them. But that's when you work with a CPA or an accountant, that's the information that it's their job to share that with you and to give you that information so you can make good decisions. And
I guess I want to know what questions I should be asking, because
Sherri, I remember, I'm going to just share an example of mine. Somewhere in the mid of my growth phase, when I was a contractor, I bought 2 machines in a year. Equipment machines, diggers. And it was a Toro Dingo. I don't know if you guys know what those are, but they're awesome machines. And I didn't know enough to tell my accountant. And that was something that should have been put in a schedule. Like, is that a good example of something that these contractors should tell their accountant, hey, these are some of the hard goods I have.
Right.
And some of these things can be depreciated. Some of these things can be put in a schedule. Sometimes that gets missed.
Right. And I feel like that's our job as accountants. Like I tell all of my clients, if you're thinking of making purchases during the year, let's talk about it before you do that. Let's review your tax situation in the fall to see where you're at tax wise, and then talk about what we should be doing in terms of equipment purchases or retirement funding. I feel like, so many people look at tax preparation as get it done in April and walk away and close the door. We work year round full time because taxes, I have clients that call me from dealerships when they're thinking about making a purchase. I've had clients call me from lottery headquarters when they win $15 million. Like, we're part of that team for them that helps them make decisions all year long. And that's the kind of accountant you want to work with. You want somebody that's going to be there to answer those questions and encourage them during the year.
There he is.
Uh-oh. I
guess it's all I'm ever trying to think of is that I feel like over the amount of years I've been doing this in the business, every year I'm always learning something new. Mm-hmm. Like it's not usually from you guys. Which usually when I'm talking to you guys, it's like trying to get something done. It's talking amongst Nick and other builders is like, hey, what are you paying? What mm-hmm. Hey, I learned about this, Nick, on TikTok. I learned about this. You know what? Should I be focused on that? And it's only coming to your attention because it gets flagged or you get a huge bill in the mail or something comes up that triggers you to dig into something deeper. I guess I wish there was like 5 points of action that like you need to know. Like if you're going to buy clothing for the company, Carhartt, whatever it is, you can track it through the Carhartt app. And you have it, so then you can then write that off at the end of the year. It's those little things. Like every time I'm on the phone with my mom, she's like, "Did you keep track of your mileage?" Like she's like my tax prep or my analysis person. Is that she's always like, you bought hockey pucks for coaching. That's a write off. Like she knows more about it than I'm even focused on. So I feel like I wish there was like a boilerplate 5 to 10 things that, hey, I know like every time a contractor comes in, they're missing it, that they didn't even focus on this. That's an easy gimme for you guys to nail down.
But John, it's not like even when your mom tells you about the hockey pucks, it's like every year I always get the question, did you donate any clothes this year? I'm like, oh yeah, like 7 trash bags. They're like, any idea on the value of it? And it's like, no, year 8 of me putting this stuff in a yellow container at the gas station, still not tracking on how much it was valued at. And I think that you're right. Like needs to be this list of like 5 things that we should be doing, but also, what's the best way to go about it where it's like I could spend, 4 hours looking up that t-shirt online and figuring out that shirt's worth $5 because it sells on eBay. Like what is truly the best way to go about it? Because the reason I don't put a value to it is because I'm not going to spend the time figuring out what those jeans are now worth, what those those shirts are worth, where it's like, well, no, you don't have to do that. Like you should be tracking, the value of it by assuming that, XYZ. And it's a 5-minute exercise. Once I know that, then it's like, great. Now I know what I need to do and how to do it in the most efficient way possible. And it's not going to take up valuable time elsewhere. And I think that, like I said, John, like step 1 is understanding what we have to do. But step 2 is understanding how to do it in the most efficient / fastest way possible. So we don't put it on the sideline.
Right. Yeah. And I think a good accountant makes that their job to give you those highlights.
But we don't know what a good accountant is. A good accountant for me is that she got my stuff done, and I don't have a penalty. Right. That's really how low the bar is for me.
Right. But a good accountant, you should feel like your questions are being answered, and you shouldn't have to be relying on TikTok or your mother to give you those answers. A good accountant should be able to, answer an email within a short period of time and give you the information to empower you. And I feel like, that's part of being, when I have clients, we're part of their team. Like that's, I think what a good accountant is supposed to be doing. It's all part of the package,
So, okay. Agree with all that. How am I supposed to know if my accountant should be fired or not? Like I guess I already know the answer because I'm looking for a new one. Based upon the fact that the CFO and bookkeeper that we have on staff now have evaluated it and said that there's better ways to go and there's better options and we need to have somebody else. Again, I'm not going to be the lawyer. I'm going to hire a good lawyer. I'm going to hire a good bookkeeper and that stuff. But that was 3.5 years ago. It took me to find a new bookkeeper for us. So there's a huge lag for us.
Yeah, the question is just like when someone's building a house, how do I know how to find the right builder? Yeah. It's like, well, let's flip that. Like we're builders, how do, people that are builders and contractors are listening to this. It's like, what is that process of finding, a good wealth manager, a good retirement manager, a tax strategist? Like, how do I go about finding that right person? Like simply put.
And I the best way to find these people is through referrals. If you have someone that says, oh, I love my accountant, I get all my questions answered. I feel very confident every time I file a tax return. Your best way to find someone is through referrals. And I would interview a couple different accountants and pick the one that you have the best rapport with. You want someone that's like-minded. I've interviewed clients before and said, I just don't think this is going to be a good fit for either one of us. There's such a thing as not everyone is meant to be a client. Mm-hmm. And I feel like when you meet an accountant, you either connect or you don't connect. You don't want an accountant that's going to hang you out there and expose you to potential audits and things like that. We look at clients in terms of audit proofing returns. We want returns that look good, that don't encourage audits, returns that can stand up in case of an audit. If I have clients that are pushing the envelope too hard or that are going to expose me and my license, that means it's not a good fit for me either.
So hold on one second. What did that mean? Like if they're pushing too hard? Like when you guys first got on the podcast and you started throwing all your jargon around, like you guys all sounded legit. I wouldn't know the difference between if any of you guys were junk or not. It sounded awesome. You got great billboards behind you. It all
It's like,
fits
you
the
got to
bill.
file a TC 401k or you're going to be sued by next December.
But where do I
Right.
sign? Send me a
I don't even know.
DocuSign. Like,
Yeah.
I wouldn't even know.
Well, and in terms of accountants, I get my license from the Internal Revenue Service. I have to take 40 hours worth of education credits every year, and I protect that license. So I'm not going to work with a client that's pushing me to take deductions that I know I can't support in an audit. But you want a credentialed accountant. You want either a CPA or an enrolled agent, someone that's staying ahead in terms of education, that knows about current tax laws. You don't want someone that hasn't taken a class in 20 years. There's some real basic things in terms of you have to maintain your education, you have to keep up that license. And from our perspective, we have to protect that license. So you don't
how
want
would I
anybody.
jeopardize that license as a builder?
A great example is a client that's deducting, astronomical amounts of meals and entertainment, and they're taking and deducting all kinds of, entertainment expenses that I know I can't support at an audit. And what I do when I do a tax return is I'll say, I look for red flags. One of my areas of expertise is audit proofing tax returns, in a sense that I know from having done tax returns for so many years, I know what puts up red flags. So I will instantly say, hey, this expense isn't in line with your type of business. And this is something that could put up a flag and potentially cause an audit. So we talk about expenses that I think are audit flags. And in some cases, they may be legitimate expenses. And if we know that we can support it in an audit, the expenses there is legitimate, we run with it, but only if we know we can support it. But I still put out the pros and cons to the client, and then it's up to the client to make that decision. But there have been plenty of cases where I've had clients that have wanted to push the envelope in terms of deducting 10 vehicles, 7 of which belong to in-laws and outlaws and teenage kids in the house, and people trying to deduct pet food and all kinds of things that don't belong on tax returns.
I do hear on TikTok that a G-Wagon you can write off because of the weight class.
A G-Wagon?
It's amazing, Nick.
What if my dog comes to work with me every day?
No.
Really?
No.
Well, it's just a service animal. You're good.
Oh.
See?
Well,
Get the
service
vest.
animal we could talk about.
See? Like, I already know more than I'm giving up.
Right.
I looked into it.
I want to shift gears for a second from a wealth management perspective. So I look at like what we're doing, right? Like as builders, as contractors, we people always look like, it must be so nice being able to just work on your own house. You must save so much money. You must make so much money. You must flip this stuff, build this stuff. We all have the idea and the mindset of like, okay, I can look at that house. I could put $150,000 into that and make a quick 100,000. But it's, we know that we can do that. We have and we have the skill set to do that, but we run out of the physical bandwidth to do that. And I look at like portfolio management, asset management. That's one of the highest paying careers or highest paying industries. And is it the same? Like, is it the same for you guys where you look at the opportunities in wealth management? Again, I'm looking at your beautiful poster behind of like Bitcoin and stock and having the understanding to another level where it's like, I buy cryptocurrency as a hobby. I'm not investing a lot of money into it, but when you have that understanding, and this is more of like a personal, like being in your industry, not so much helping, but like, is it the same for you guys where it's like you understand all of these opportunities and it's impossible for you to take advantage of all of them?
I would agree, and I'm not at all active or engaged in any kind of crypto with my own money.
This is not financial advice, by the way. I think I have to say that.
I would use other people's
investing
money too.
advice.
And there are certainly plenty of clients of our practice that have much higher order needs and sophistication than my family's needs. And we have clients that probably should have some crypto and alternative investments and investment properties and multifamilies and my financial circumstances are actually probably the equivalent of one of you guys living in a 3-bedroom split level. It's pretty typical. It's not atypical. I don't have $20 million in my Roth IRA. That's just and I've had a 35 year career in financial services, and I've had some years when I made what most of us probably think is a lot of money, and I probably on average have made a lot less money than people outside the industry looking in think that I made.
Mm.
Is it really the cobbler's kids have no shoes? No, I don't think so. I pretty much have been eating my own cooking the whole 30 years. And I actually use this line in the presentation. One of my primary responsibilities is to teach my clients how to get rich slowly.
Mm-hmm.
Right? I'm all about getting people to sign up for their 401k, contribute 3% of pay or 5% pay, and invest it well for 30 years, so that when they retire, they have enough money to replace their paychecks. And working with the rank and file and helping the regular employees do just that is one of the most satisfying things in the career. So, sure, we have some really sophisticated clients that need all sorts of esoteric private equity investments and crypto and whatever, but those are more the exception than the rule. And it's much more typical for us personally and for our clients to be, regular dual income household with 2.5 kids and 2 houses and 2 mortgages. And we're just trying to help them use the capital that they have as efficiently as possible,
Mm-hmm.
to manage their taxes as much as we can help in partnership with their CPA many times, and to take advantage of tax law to set up tax advantage retirement plans for both themselves and their employees. And it's actually kind of mundane, but it's also shocking how frequently I encounter self-employed people who are doing very well and have been for very many years and have never grown beyond the IRA.
Mm-hmm.
The most simplest self-sponsored retirement account that there is. And there are much more useful types of plans out there that aren't necessarily complicated or that you can outsource.
But,
I do want to go back to one thing that Johnny said, very similar to what Sherri was saying. We have a credentialing process in this business. You can check our licenses and our background and whether or not we've had customer complaints on government-sponsored websites. And there are specific credentials for financial planning, retirement planning, fiduciary stewardship that I have earned and maintained for decades, and they come with significant amounts of continuing education requirements. So I have to keep learning and stay abreast of what's going on from a regulatory standpoint, very much the way that a CPA does. And the best financial advisors, you have those 2 things to check, but then you also have the third thing I think is important is to work with someone who is a fiduciary. And that is different than a broker. A broker sells product for commission, and they are not obligated to put your interest first. A fiduciary basically charges for their advice, typically a fee, and they are obligated to put the client's interest before their own. And to me, that's the 2 major categories of financial advisors in our industry. And there's still an enormous number of advisors out there who are brokers. And they work at firms that do not allow them to be a fiduciary. And those firms are some of the largest firms in the business.
Why would they not allow them to be a fiduciary, just to be able to make more money internally?
Yes, yeah. And in certain circumstances, because they want their advisor employees to put the interests of the firm before the client. And that is their policy.
That's the reason why I don't invest.
So is there like a testing or something that you have to take to become a fiduciary? Or is that just something that you say, hey, this is what we represent, and obviously there's a business aspect of that. But how do you what's the difference? What's
Well,
the point of entry?
It's more the latter, but it's kind of both. So from a testing and professional designation perspective, I am an accredited investment fiduciary. For that, you have to be trained and test and continuing education requirements. But then it's also a business decision about what's your business model, and are you going to sell products for commission and maybe not necessarily fully disclosed how you get paid or how much you get paid? And is your relationship with your client going to be transactional, or are you going to be a relationship-based advisor who gets paid for either their time or a fee for assets under management, depending on the services that you're talking about? And are you going to fully disclose how you get paid and how much? And make sure that your client understands that. And also, I think it's important when you're a fiduciary, you can't. Your compensation can't be contingent on the advice that you give. So in other words, I can't advise someone to take action that will pay me more, right? A broker is allowed to do that, right? Their advice is by definition not objective, because the way they advise you impacts how much money they make. Whereas it doesn't matter the advice I give, my fee is the same. So if I'm telling you to invest in this or that, it doesn't impact how much money I make.
So what's your incentive? Is it like, this is the same as people that, for GCs and contractors, that if their margins are low, they have to do more volume, so
Long game?
yeah, or I'm just saying, what is it, trying to figure out what the asset, well, not the asset, but the incentive is for people when a lot of, for contractors, it's I'm just going to do more kitchens. I'm just going to do more volume that year so that my numbers go up.
Well, the incentive for us is to grow our clients' assets, because the more assets we're managing for our clients, the more we get paid. Mm-hmm. And so our interests are aligned. The better our clients do, the better we do. And that's the kind of relationship you want with your financial advisor, where your interests are aligned and they're going to make more money because they're making more money for you. So, in the corporate consulting world, for example, we might have, a 5-person contracting firm with $1 million 401k, and we're charging them 0.5 point, right? So we're making $5,000 on that relationship. Well, if we triple the size of the plan over a couple of years through good advice and investment selection and behavior coaching, well, we're going to triple our fee. We're going to make 3 times as much. And most of the time, the client is thrilled because we've also tripled their money.
And part of the answer is the name of your show, too. If you're a really good craftsman, you don't want, if you're a finished carpenter, maybe you will go build modular homes. But I doubt that's going to hold your interest for a long term. And so by being really good at the craft, and I'm also an accredited investment fiduciary, and we wave that flag proudly. We're good at it. It's what we do. And that is the flag we have in the ground, and it's what and who we want to be. Much like a finished carpenter wants to be just that, really good at his craft, really good at his trade. And putting up a modular home is gonna, it doesn't pique your interest long term.
Is there a kind of market for each on a broader scale? Is a broker typically dealing with larger corporations that have, a ton of people who gets, as their benefits, some sort of wealth management, or is it, every case by case, everything's different?
I would say it is case by case, but the industry has evolved really significantly over the last decade or so. And the likelihood of a large corporate client having a broker and not a fiduciary is actually getting to be pretty low, right? The biggest clients, the big institutional pools of assets, the huge corporate retirement programs, endowments, foundations, they're all almost exclusively working with a fiduciary advisor or consultant like us. And they're not in a broker-dealer relationship anymore, although 10 or 15 years ago they were.
Is there a benefit to somebody going with a broker? I mean, I've had this conversation before, and I don't understand why you would go with a broker versus a fiduciary.
Well, I'll tell you something of a satirical story about a broker that I ended up across the table from in a job interview about 5 years ago, before I joined this practice. And he was trying to convince me to join his practice. And he was trying to sell me on how not being a fiduciary was an advantage for him. And the gist of it was that because he was not obligated to put his client's interest first, he had more flexibility in how he could serve his clients. And needless to say, there was no follow-up interview for me. That is just one of the signs, like, you want to run for the hills. That's, borderline criminal from my perspective. But that was the way that he was managing his business. He's the guy that Sherri would describe as always pushing the envelope. Right.
But I mean, from the customer perspective, why would I go to a broker versus, like, I would feel more comfortable and more confident investing with the fiduciary? Why would someone choose to go with the broker? And I mean, I guess it would be the same thing if they're looking for somebody to kind of push the bounds some.
Yeah, or on education.
I think it's simply a lack of awareness.
Yeah.
And many of the brokers out there who are not fiduciaries to their clients are working with clients who think that they are.
Yeah.
Not knowing to ask that question is a big deal. So you had asked, how do you find a good accountant, or how do you find a good financial advisor? Knowing to ask that question, and more importantly, knowing why you're asking it, is of utmost importance.
I think when you are in business and you put together a team, you have people on your team that are looking out for your best interests. I know for myself, I've called out bad brokers. I can tell from looking at tax forms, the 1099s that we get. There's been several times I've said to clients, hey, I think you may need to look for another broker because I'm on my client's team. So I think as you build a team of people that are part of your team and they're looking out for you, they're going to ask, you're going to get referrals with people that are the right types of people in terms of fiduciaries. And, and you may have a fiduciary that says, hey, your accountant doesn't want to have a conversation with me and go over, the implications of your portfolio this year. Maybe you need another accountant. I think that's all part of building a good team for yourself.
Yeah. And if I heard Sherri right, that would come up when an accountant maybe finds an excessive amount of trades in a taxable account that is carelessly realized taxable gains
Short
for
term.
no good reason, no apparent good reason other than to generate more commissions for the broker.
Mm-hmm.
Right? And when you see that kind of behavior, especially when it has tax implications and you're looking at it after the fact, when you really can't do anything about it other than replace the broker, it's very, very frustrating. But it happens all the time. And where you look at those trades and you wonder why they're paying those taxes, and there's no good reason other than someone's interest, other than the client's, was being served.
Right.
Yeah.
So all these I guess infamous people who are financiers who get in trouble and then wind up dying in weird ways, are they like the broker fiduciary thing, or are they just brokers? They just like a completely separate entity?
they're just like a bad builder who didn't use the material to spec. I mean, they're people who just, have lost their way, push the envelope, press up against the bounds, and the first big windstorm, the house blows down. I mean, it really is no difference. They're using their tools in the wrong way.
Mm-hmm.
And I think too, you'll find that shady builders will work with shady accountants and shady fiduciaries. If that's the nature of how you run your business, those are the people that you want to work with, versus if you want everything done correctly, you're going to find an accountant and a fiduciary that will do things the right way. It's all part of making, your team is aligned with how you operate.
Yeah, I would say that there's probably a lot of people who would actually look for that in a broker or an accountant to try and, save money or increase their wealth.
I feel like I need to have wealth management.
Well,
I feel like
that's what I was, going back to the point I made earlier. It's like you hear, the wealthy are working with wealth management because they have the resources to do it, and that resource being money. But the way to combat the need for money is to be educated and realize that these opportunities exist, like you guys are talking about. And it's, I'm not having someone do this for me. It's like, hey, manage I need someone, go find me someone to manage my wealth. I'm learning it through your podcast, through social media, realizing that, hey, this year is going to be a good year for us. It's like, we're going to be profitable. What, should I be doing something with that profit? And more than, go ahead. Sorry.
I'm sorry. I think the most important thing, like Johnny said, that you have to have the wealth to manage, but that's not necessarily true. I'm going to push back on that. You have to have the plan to build wealth to manage. And it really just takes that starting point. You don't start with a crop. You start with the seeds. And so you have to start with a plan, and developing that plan, and it can literally start with $1. That's how you build wealth. Building wealth is different than people who just have come into wealth, and they are two very different types of wealth. But building wealth starts with a plan.
No, I totally agree with you. It's kind of that. I jokingly said it, but I was also serious because I know when I was younger, my wife's the one who got us an asset manager. It's because we had our kids in whatever it was. It was probably a Montessori or something. And then they were going to public school, and then that was going to be free. So it's like, all right, what do I know 15 grand is going to become available. What do we do with this 15? How do we make this 15 work for us? Or do we just put it in a savings account, or do I just cash out and put it underneath my bed? What's the deal? So I think that's what we went to. And I just sat there like I am right now listening. And it was more of just, it made sense to kind of move things around and have a kind of a safe plan and investment and move that. But again, I think every time I started a 401k, I had one in an old business, and I thought I was finally going to be successful when I created one. And I think I took whatever percentage out of my paycheck that year and put it in. But that's as far as it went. It was never like I want to invest in Apple or stuff like that. I didn't know enough. So yeah, we do put a huge amount of trust into people like you guys and girls that can kind of, use their knowledge. But I guess my worry is when I made that comment about, do you take on more clients or less clients and make those clients more successful? Like you said you did. That's like, it's tough to find those people, because like I know my accountant right now, he gave me all that stuff, made it easy for me to get QuickBooks, gave it to me underneath his umbrella. So I had a savings of $50 a month or whatever it was. But, it's always late because he's got so many clients, tough to reach, all these things. So after 3.5 years, because everything else is a big priority, my family, work, paying bills, getting stuff paid, it's taken us 3.5 years to make a change on something that we knew year one. So I guess my point is that if I'm having that problem, I'm going to assume that a lot of other people are having that problem. And like, how is it, like, is there a bigger resource to find? Like, we found you guys just because, I know you guys through, an umbrella of hockey and stuff like that, local, and we trust that. But like, how else are people looking? Otherwise, you drive by a certain road and you go, oh, CPA, I should pop in there. Like, literally, that's it. that's the benchmark to get in, and either you call or, like you said, a referral. I think this referral was from somebody else, but that was a personal tax person. That's how I got my person now. And it should have been something that's more catered towards construction, in my opinion. And that's what we're looking for now, is to kind of, hey, what's going to keep us safe? Same thing as an attorney. What's going to keep us safe? I'm not going to be the person. I don't expense anything for food, gas, any of that stuff. It's all paid personally. But like, I'm not taking enough advantage of the company, the reverse of someone that's going to put your license in jeopardy. So I guess what would I like when you like? I feel like it's this whole time. I'm like, if a great client comes to me and goes, hey, I have this amount of money. I have this cool house. I want to do something cool. My initial thing is like, boom, I want you to find this attorney because it's this style. I want you to do this interior designer because they're going to fit your style, right?
Architect.
Yeah, architect, interior designer, and then landscape architect. I'm going to put that team together because I know how much I can save them and benefit them long term. Like I keep saying this and it's coming out wrong. That's why I keep trying to rearrange the words. But like when you guys see a builder or a contractor, whether it's a sole proprietor or 5 to 10 employees, what's your slam dunk? Like, what do you know that the last guy probably missed, and that you guys are going to start vetting out these first 5 things, like I just said, for us, and go, all right, did you buy the truck personally? You did. All right, the company's going to pay that truck back to you. Stuff like that. That assume we know nothing and assume we don't have time to look up anything. What's your first 5 things that are going to save me hundreds of thousands of dollars, so then I have assets and wealth that you can then manage?
Billions of dollars.
Billions.
So maybe I'm going to share that I just finished a pretty major renovation of my home. New kitchen, floors, paint, new heating system, central air, a pretty big job. And we found our contractor through a referral. He actually had 3 jobs on my street. So on 8 houses on my street, he had 3 of them going at the same time. And I know that while he did my house, he had 9 other jobs going. And through a public database, I can go look up whether or not he's got a 401k. And he does not. And I'm figuring the other jobs are probably comparable in size to mine, and he's got 10 going at once. And he might have done $3 million in revenue this year. He's got 1 employee. At 1, and everyone else is a sub. And he doesn't have a plan. Now, I don't know what his taxable income is going to be this year, so I don't know how many trucks he's going to buy. But he needs a very thoughtfully designed retirement plan so that he can put away, $58,000 each for him and his 1 employee this year and write off the 116. But he doesn't know that. And now, is that an ideal client for me? No, but that's pretty low-hanging fruit. The reason it's not ideal is because he doesn't have 10 employees instead of 2. Because I'd much rather work with someone that's putting $500,000 a year in their plan than 100, and grow the plan, really rapidly over 5 or 10 years. That's a better client. Now, he's probably going to have to hire more people. He'll become a much better prospect. But whether he's a prospect for me or not, he needs someone like me. And as soon as I could see all the jobs he had going at once and where the price points were on those jobs, and I'm guessing all those jobs were between 150 and 250 each. And, so pretty significant sized jobs for such a small firm, but they're just crushing it and he doesn't have a plan. So
with that said, what would be a good amount to put away for a year?
Well, okay. So
let's say he makes, what do you guys want him to make?
For he makes 500,000.
No, for salary.
For salary?
Yeah.
175.
Okay, that's good. That's a good number. How about we do like $85,000 for everyone listening?
How about 100 so it's easy?
Okay, 100 grand a year. If there's a builder making 100 grand and his employees making 50, what should that company be setting aside? Like, if you don't know how profitable they are, but if we're assuming they're profitable.
Well, so some of the money should be saving from the employee, even the owner, employee, and some of the money should be contributed by the firm itself. It should be coming from both sources. So
if I make $100,000 a year, what should I be putting away for retirement?
let's say you put in 7,500 and the company puts in 7,500, then you're saving 15% of that. Now, the reason I go right to 15 is because we know if you save 15% of your gross average over your career, we're going to be able to generate about 70% of your working income in retirement and have the money last forever.
So I'm 42. Should I be putting more in now if I'm starting?
I don't know. You've been doing 15% all along?
No, I'm starting. I'm starting now at 42.
Well, then you got some zeros in your average. You need to start saving.
So tell me what that is. What am I?
Well,
this is a way for me to get free advice, guys.
I was going to say, this is John doing it without paying for it.
if you want to replace your income when you can't swing the hammer anymore, you got to have enough capital accumulated to generate that income. If the average savings rate over your whole career needs to be 15% and you save nothing until you're 45, you probably need to be saving 25 or 30% of your gross.
So you know what everyone else just listened to that said that heard that was, then why bother putting anything in? If I'm already so far behind, why start? Right.
All right. So let's take that just a little step further, right? Because let's talk about the slam dunk of why do you want to do this? Okay. The slam dunk is, so you're going to come in at tax time and you're going to have a big tax bill. We're going to want to know how we can get that down. If we know you're in a 24% tax bracket, then when you make that $15,000 contribution, it's not going to cost you $15,000 because we're going to save you $3,600. So that $15,000 is only going to cost you $11,400. But the best part of that is that $15,000 is still all yours.
Hold on.
Can you do this with mental math and stop using the calculator, please?
Old school calculator. Let's get the paper on the top, right?
So let's use 20,000 because it's a rounder number, right? 20,000. We know you're in a 24% tax bracket. It's going to save you about, let's just call it $5,000. Okay.
But when you say that, right, you're in. You're going to save $5,000. I just want to make sure I understand it, and I think from the listeners, you're putting $20,000 cash value into this, and you're getting that $5,000 back at tax time against your.
You're not paying the taxes.
You're not paying the taxes on it. So it's not. You're not putting $15,000 cash value into something and getting $20,000 for it.
You're putting 20,000.
You're putting 20,000, yeah,
and not having to pay an additional $5
based on that. That's something I just wanted to clarify because I think a lot of times, and it's money. Like at the end of the day, it all washes out to one set amount, right? Like your net worth, your wealth, whatever. But the way in which that money gets to you is different.
Right.
And I guess like this, it's similar to, when you buy a car, right? You can either pay $500 a month for that car, or you can buy it outright for $30,000. And that $500 a month is maybe more obtainable by people, even though at the end of the day, it's going to cost them $45,000. It's easier to afford that.
Yeah, but what if you can invest your money and leverage it and get more than your interest rate?
Agreed. I just wanted to make sure we clarify that because that's what I think people look at it through the blinders of like, all right, I'll get $20,000 if I put $15,000 into something. It's like, no. You're going to put the $20,000 in and you're going to end up saving the $5,000. It's not a straight up, here's $5,000 back. It comes out in the wash.
But keep in mind that that $20,000 is still yours. You actually have $20,000, but it really only cost you $15,000 to fund that.
Do you know what the toughest part, I think, Nick, is for contractors as well, that so many are living paycheck to paycheck or robbing Peter to pay Paul.
And that's
so
what
by
I
the
mean
time
is...
tax season rolls around, they don't have the money to put that in. So like their taxes may not be due for a couple of months, so they can buy time and they don't have the money to invest that.
And that's
So they'd
the
rather just not invest it and then be able to pay the taxes later because
Right.
that's the only workaround that they have.
Right. And that's where it's like, yes, better strategy would help with that, where it's like, hey, I've been there where I've had a 6-figure tax liability due the next day, where it's like that wouldn't have hurt as much if I was paying a couple grand every month. But when I get it
So
on April 14th and it's due the next day and then I'm filing for an extension, that's a big bill to think about for the next, I don't even know how many days that extension is. But when it's broken up, in smaller payments, it's more obtainable. You can budget that. You
Right.
can't budget. I mean, most of us would not be able to budget $125,000 surprise bill.
Yeah, paying your quarterlies is a good habit to get into, and you know how hard that is when you're sitting in the offices that you guys are. But that's a good habit to get into for 2 reasons. One, you're getting ahead of the game, and 2, as a contractor, if you can't keep up with your quarterlies, there's something wrong with your pricing model. And it took me a long time to figure that out for myself.
Mhm.
And I figured out that I needed to reprice my jobs and take less jobs. And it took a year for it to kind of right itself. But man, when it righted itself, I could see it and I could feel it. And so, as much as it's important to talk to people like Sherri or us, it's also important to take a look in the mirror and look at your pricing model and saying, am I pricing just to get the job, or am I pricing to make money? Because you want to build a company. You don't want to just create a job for yourself.
Right. And that
a
is
lot of people fall into that.
Absolutely. And I think, myself included, Tyler and John can probably speak to that.
Me too. Yeah.
We all at some point or through our whole career have been in the position of just pricing to get work and never actually putting a plan together. And this is, kind of full circle to what we started with in the beginning, is like, you need a plan. And, I think that for our bit, like for my company in general, we are hyper focused on what our plan is, for the next month, the next year, what our growth is beyond that. And when you focus on that and you actually start, moving towards that, you start really putting those things into place, like quarterly, money for those quarterly taxes and beyond, where it's like, now you're not just paying taxes, but now you're working with someone that, helps strategize, and I think this is the connection between the asset strategy and the tax strategy, is that, if you're strategizing your taxes correctly, you can take those findings or those savings and then dump them into asset strategy and wealth management. It's like, hey, typically you're going to pay $5,000 a month for taxes. We just cut that down to $3,000. Let's take that other $2,000 and work with a wealth advisor or an asset strategist, and let's start investing that, into Shiba Inu or something. No, I'm just kidding. But
I mean, it's even thinking about, paying your quarterlies, and while that's never fun, you should at some point sit down and figure out how to structure, how much your sales are going to be for that year and how much you expect to pay in taxes. And your accountant should be able, or bookkeeper should be able to help you with that, because that's not money that you should necessarily be paying, but money that you can actually be charging based on a percentage of, if you think you have one employee and you want to make X amount, and you make X amount on your employee, how much are you going to be paying on those taxes to build that into your pricing structure, that's not coming out of your profit. That should all be part of what you're charging for your customers. And I think a lot of people don't realize that. And then their quarterlies come up, or their end of year comes up, and it's coming out of their pocket because they didn't properly work that into their pricing structure based on their volume of sales.
So my most challenging client is a client that comes in April, last minute. You do the tax return, and when it's time to talk about what they owe, they say, I can't possibly owe that. I have no money. Mm-hmm. Now think about when you're an employee, what do they take out off the top? They take out taxes, they take out retirement. So it comes out before you get your net paycheck. And I think that's the key to taxes, and it's also the key to retirement, because small amounts don't feel as badly when they come out as small amounts. And what I encourage everybody to do is pay it as you make it. So if you know that you're pulling out $1,000 a week to go into your personal account, and if you know what tax bracket you're in, you set that amount aside. It comes out, you can set it up easily to come out with an auto withdrawal into a separate account, and that's what you use to pay your estimated tax payments. And the same thing goes for retirement funding. Take $500 a month, whatever it is, put that into a separate account, and you can have that withdrawn automatically and put into a retirement account so that it's already in there. So you're not coming in at April trying to make your first quarter estimated taxes for the current year, pay 100% of the previous year's tax, and come up with retirement funding, because that's how people get really far behind really quickly.
Yeah, that's good advice. I mean, another thing that my wife and I do, because it's really difficult when you're self-employed to take a check and then say I'm going to put X amount right away, and it's the whole, for us, it's the out of sight, out of mind thing. So what we ended up doing is leaving my business money where it is, and then we bumped my wife's. She works, so we bumped what comes out of her retirement and her savings out of her check, so it just appears as if my wife's making less money.
Mm-hmm.
And it's out of sight, out of mind, rather than pulling it out of the business. So there's definitely ways that you can get around, and you're as foolish as it is, you're just tricking. I mean, it's not foolish, but as silly as it sounds, you're tricking yourself into thinking you have less money. And if you can make it work that way, that's kind of a workaround that my wife and I have, where it's like, let's bump your numbers up. We'll leave my money on the business end where it is, and then we're still saving what we want to be able to be saving.
I have lots of clients that do that, and it works very well. I have a lot of people that also do auto withdrawals. So they have, a brokerage account that's automatically pulling money out every month and putting it into a specific retirement account, or a savings account that's being used for taxes, or 529 plans for education. It's coming out every month automatically. And like you said, out of sight, out of mind, it just comes out. You don't even think about it. And that's how, in my mind, that's how successful saving starts. You set it up so it's like a monthly bill, and large amounts, given the gift of time, small amounts become large amounts. That's how successful people get ahead.
Yeah, and if it's something that pains you, you're probably not going to do it. So if it's tough for you to sit there, get a check from a customer and then transfer that directly into another account, you need to find a way that it just kind of goes there without you having a hand in that. And then it's just like anything else. You learn to survive on that amount of money. I think that even one thing for self-employed people, or getting into this, or, a contractor who isn't great with money, it's start, like John, you're asking what to start with. Start with maxing out your IRA every year and having enough money saved at the end of the year to be able to handle and cover your taxes, and then max out your IRA, because then you're saving yourself money and you're also putting that money away, and that's a good starting point for people if you can't do more than that. And the goal is obviously to do more than that, but it's a really good starting point for you.
So that's a good point. Like, what is maxing out an IRA? Like, what's that value? Because I feel like people that listen to this goes, yeah, I want to do that too. So what is that value? And then if you divide it by each month and then each pay cycle, it isn't crazy. It's doable for anyone who's not doing it.
I think it depends on your business structure. I think mine's either 5,000 or 7,500.
Do you want to comment on that?
6,000 a year.
Then it's 6,000.
And there's, and you guys know there's a couple different options available to self-employed people. We can look at traditional IRAs. There's Roth IRAs. There's SEPs or simples. I love simples for a lot of my self-employed people because they are so simple. And it's something that I encourage people to get set up to do a simple, and set it up on an auto withdrawal so it's coming out automatically every month. You can easily offer it to employees if you have them, with a very low match. So, it's not a huge commitment for an employer, but it gives the employee an opportunity to also do some retirement funding.
So that breaks down to, like, if you pay yourself twice a month, that's $250 a month. I mean, $250 a pay cycle. That's doable for anyone who's. Sherri, you breeze over like a sole proprietor doing it. They're going into matching. I worry that people, and I've been there, we talked about it being a bubble and being by yourself, that I'm really trying to talk to someone who is not doing anything, that needs to like go, hey, if it's 250 and you have a job that's going to run for 3 months, you need to be able to price that in. So when you're pricing your next job for the next 6 months, start there. And then it's the same as like you do it when you need liability insurance so you can get a permit for certain states, obviously. But like, why wouldn't you do this for yourself? So I guess that's my point, is that whoever's not doing something right now, just take 250 every cycle, times that in and put that into your next job. Price it into your overhead, whatever it is. So that way you have a piece, start there. 6 months from now, you have that behind you and you're going to feel good about it. Then you can start doing something else. Your clients didn't say no to you for that job because you added in a little bit of retirement. They're not going to say no. You deserve it. There's people at McDonald's getting more retirement than you.
Right. And all the years that I've been, it's been 35 years I've been doing this, encouraging clients to put money into retirement. I've never had clients.
When you start working, when you were like 4 or 5, geez, holy cow.
Right. But I've never had clients say, oh, that was the worst thing I ever did was to put that money into retirement. I tell people, if your choice is to be self-employed, in order for your business to be viable, you need to be able to pay your taxes and pay for your future. And that means funding your retirement, or it's not a viable business.
Yeah, I think that people, when you're self-employed, you, especially starting out when you don't understand the business end of things, you're just trying to make it work. And then it gets to a point where you don't reflect, or you don't have an accountant that sits there and reflects with you and tells you, hey, your business is not sustainable the way that you're operating right now. If you can't put money into a retirement and you can't pay your taxes, then your business model is not sustainable. And unless it's just a business for tax benefits, it doesn't make sense. You could go work for somebody and be better off than that. So, maybe you're supporting a lifestyle, but long term, that business model is not a great business model, and you need to sit down and figure out what you need to put in place to be able to, at the least, pay your taxes and save some money.
Yeah. And Johnny, I think you characterized it really well. You price in, when you're pricing a job, you price in the expenses. Well, your retirement contribution is an expense. It needs to be in your pricing model.
Yeah, I really like the way you broke that down, Johnny, because someone in your listening audience right now is listening to this and they're doing their takeoffs and they're building a sheet. At the end of that sheet, you have profit and overhead, or you have maybe an insurance line item. Put a line item in today. If you're listening to it, just put in a line item today and have it be $250. Amortize that over a month and divide it by the jobs, or if you know you're in one job for a month, put that money in there. And Johnny's right. You will not lose the job because of that $250. You will not. But you will gain a future. You'll be starting a huge future, a big step for yourself. So step one is, you might need to reach out to one of us, or just you can Google it. You can call someone like Sherri and find out how to set up an IRA. Just open an account. It's very easy. So let that be what you do after your takeoffs, and then put that line item in and make that a habit. If you get one thing out of tonight, you do that, right, you're going to be a happier person in a year.
And, and a great way to do that is to back into it and say, okay, if I'm going to get up every morning at 6 o'clock in the morning and put myself out in the field, what do I need to make? And if that number is $100,000, it's $100,000 plus that retirement number, plus that tax number. Divide that out by 52 weeks. And that's the amount of money over your expenses that you need to have available to yourself every week in order to make that business viable.
It doesn't have to be as complicated as people try and make it out, sorting out how to make their bit. You can look into every single thing, but I do, it's a good point to kind of look at it from 1,000-foot view and say, what do you want to make? How much do you want to save a year? And then you realize what type of work volume you need to do to support that, or how you need to structure your business. And then the other big thing for us is you have to be disciplined enough to put that money where it belongs. Like that extra $250 isn't an extra $250, you know, that you
Dude,
have
that could be a dirt bike
2,500,
payment.
$3,000. Exactly. But it's like that has to go where it's not, you're not just making more money. Like that's put in for a reason, and you have to have the discipline to invest that where you said you were
I'm
going.
so glad you said that, because I was going to say the same thing.
Automatic.
No, the problem
Yeah.
is we all get greedy, and you go, well, all right, well, I didn't lose that job for the 250, so now I'm gonna, you know, I don't know, buy that TV I wanted. People will do that, and the problem is they're not looking at 25 years away. Where, like, I am so jealous of my mother-in-law who she retired at like 45 or something like that and hasn't worked, and I'm like, I'm never gonna stop working because I love it, but at the same point, I would love the option. You know, like, but if the option's not there, you know, what am I pigeonhole myself to? You know, so it's, and I think a lot of us. Good.
So you take that 250, right? And you take that out, and it's going into that retirement account. And after a year, you say, "Hey, I did that, and that didn't really hurt. Let's make it 350." And that's how people get ahead. Is you start with a number that you can accommodate, but you have to revisit it and say, okay, we did that. The business is doing even better. Let's increase it. Let's make it 500. And you keep bumping that number up. And eventually you're putting substantial amounts of money in.
But there needs to be that little voice.
Right.
The point of today is to start that voice chirping in your ear, and then it has to continue.
And I just want to punctuate what Tyler said, and Johnny, you agreed to. Like, the $250 is not only not extra money, but it's also, and this has to be heard, because I think we can empower that person who's thinking about this. It's not boo-boo money either. Yeah. So if you're on a job and you open up a wall and your right angle Milwaukee craps out, and you have to buy one on that job, it doesn't mean you borrow that $250 to buy it. You may have lost whatever the cost of that new feature is in that job, but it doesn't come out of that $250. So you have to stay religious about seeing that as a separate line item. It's not for tools, it's not for profit and overhead, it's for retirement.
Yeah, that's the other issue, is that you know, you put this separate line item and now it appears that you're making more money, and you know, it's way sexier for a contractor to go get rims and tires on his truck than put that in a retirement account. So it's I think that that's one of the biggest issues that we run into, where when you first start your business, it seems as though you're struggling for so long that you finally start to make a little money, and you want to be able to either live a lifestyle that you can enjoy. Hey, I work so hard, I should be able to enjoy this some, where it's difficult to kind of dig your heels in and put that money away. But that's more important than anything.
I'm a huge fan of auto debit for savings. And I have clients that I talk to that we set up auto debit for the 529s, the retirement, the taxes. And sure, they may have they may need to buy that tool, but it's so hard to turn off that auto debit. They don't take it out of there. Yeah. You know, that auto debit is going to come. They have to initiate an action to stop it. So they find someplace else to get it before they'll deal with the paperwork involved in interfering with the auto debits.
It's true. Even if you think, you know, you have payments that are coming out of an account for your car, for your insurances, and if you ensure that you have enough money to cover them, you don't have to worry about those. You have to worry about bouncing a check, you know, or not having enough money in your account. To have to sit down and write a check or transfer money, if you get into the habit of that just being debited automatically from your account, and you always know that you have enough buffer in that account, you're never going to notice that money kind of disappearing a little at a time.
Yep.
John, you taking notes?
I really am.
So you said at one point, if you're saving 15%, that should be able to support 70% of your income in retirement. Were those your numbers?
Yep. And that's based on, and huge amount of research done by 3 or 4 different major investment firms, including Fidelity and Vanguard. And we reference that research. It's updated every year. We keep track of it so that we know what an adequate savings rate is. And I want to also address, and I think it was Tyler that said, well, if I'm so far behind, why bother? And
that was John. Don't group me in
John.
this.
So think about it this way: if living the lifestyle that you want and deserve in retirement is 100 on a 100-point scale, and retiring on nothing but Social Security gets you to a 15 on that scale of 100, then even if you're starting late and you're playing catch up, every incremental savings, every automatic ACH that makes a contribution of $250 to your retirement account is just slightly moving that needle, that standard of living needle, up every time, one little click. So getting to 80% of your goal might get you the very, very close to the lifestyle that you have imagined for retirement. Not everyone is going to get to 100% goal. Some people are going to save too much and over defer. Some people aren't going to save enough. Some people start late, right? Some people have very poor investment results. But whatever it is that you save, every little bit is going to be an incremental improvement in your standard of living above and beyond what Social Security alone is going to give you. And believe me, I know I have people close to me in my life who are retired and they have nothing but Social Security. And their standard of living sucks. It's a, we used to use a terrible phrase about living on cat food. And
it's like college life all over again.
Yeah, and that's exactly what it's like. And that really means you're largely dependent on others for your livelihood. And
the tough part is,
the more you can save, even if you're starting late, and even if you know that you can't get to the complete replacement of the income that you want, every little bit is going to improve your standard of living. So it does matter. And it doesn't matter if you're 50 already and you haven't started. You need to start and build in that 250 or 350 or 450 or whatever the number that will work for your business model, and pay yourself first.
And
if you work this hard, you deserve it.
Right. And I think it was Johnny that said, you need that little voice. But I think when you have a good fiduciary or you have a good accountant, those people are that little voice, because, a good accountant will be encouraging you to fund your retirement. And if you're underfunded or you're starting late, we're going to encourage you to fund more. The same thing with a good fiduciary. They're going to be saying, hey, let's have our yearly meeting and let's see if we can increase that funding. That's what your team members should be doing for you.
Absolutely agree. So in the defined contribution space, which is 401k basically, we talk about the deferral rate. That is, how much of your income are you saving as a percentage of your income? Are you saving 6%? Are you saving 7%? And in recent years, I've shifted to a little bit of a different focus. My focus isn't necessarily on the savings rate. It's on when's the last time the savings rate went up, and has your savings rate stagnated? So if you haven't bumped your savings rate from 2% to 3%, or from 3% to 4%, whatever it is, if you've stagnated, then that is not a recipe for success in retirement savings. You have to bump up the savings rate every year incrementally until you start bumping up against the legal limits where you're not allowed to save anymore. And when you get to that point, you usually got a really good start towards income replacement success.
I know something, even from my perspective, where as a contractor and just personality type, we like to achieve and obtain goals. So something that I feel has kind of helped us is where I look at where our numbers are, and then I say, by this date, I want to be here. And just setting goals, and they don't have to be these massive, insurmountable, unattainable goals, but it's like, hey, I want to have $10,000 in this account by the end of the year. And then you work towards that, and you can look at that account and you can watch it grow. And then you actually have these tangible results and something, that you're working towards, rather than just some arbitrary number that you're throwing up, or even percentages that you're trying to figure out. Where just set goals for yourself, and then that actually brings a little bit of fun and enjoyment into it. And I think that a lot of us are goal driven and deadline driven as contractors, and that has seemed to help myself, looking at our financial statements and just saying, hey, by this point, I want to have this much money in this account. And then we just work towards that.
I think one of the other two things I wanted to touch on real quick, I got to bounce in a minute, but I think people have an advantage right now with the construction market being the way it is. You can actually have a little bit of time to catch up. Like the market isn't off 08 where, if we're talking about this, you'd be like, dude, I'm trying to survive. Don't talk to me about Roths or savings. So I think for someone that hasn't started, or their business is just getting started, this is the perfect time for you to market, to write this into your next quote or next couple quotes. I mean, I talked to an interior designer the other day, and she's like, you know what? I'm going to try and double my retainer and see if anybody has an issue with it. She doubled it. It wasn't like, let me knock it up 2%. She doubled it. So like, this is the opportunity that, hey, we're at, try 250. Maybe it's 500 and you're catching up from last year. I don't know. But this is a way for you, with the market the way it is, for you absolutely to take advantage of it for the longevity of your life. That's my point there. And then the other part is, on the flip side, is we're talking about focusing on retirement. And I feel like when I was in the business in the beginning, I'm like, it's going to be 1 year, I'm going to have a windfall. I'm working my ass off. I'm going to do really well. I'm going to buy an investment property. That'll be my retirement. So it hasn't happened. And I've got a 401k. But it's like, is that a good option? Or do they have to be done simultaneously? You get me? Or do the Roth, then the next step, like to get into the retirement game is a Roth, an IRA. Or is it then to do a 401k? And then is it then time, if things are going the right direction, is it then time to, look for an investment property? Or is it like, hey, if I do an investment, I don't have to do a 401k?
An investment property is an excellent strategy to, it's not necessarily a replacement. I think it's a longer conversation, but you're talking to someone. I'll fully admit that when I was in the contracting business, I didn't pay attention to setting up a 401k the way that I should have. I did, however, buy a multifamily house here in Natick, and I've had it for going on almost 21 years now. That represents a big part of what my planning is for retirement. And I've been able to, I guess, enjoy the appreciation of the market and whatnot. I always say, there's something to be said for going with what you know. If you're in the trades and you do know how to work on a house, you understand houses, you can see it, you can knock on it. When it's broken, you can fix it. There's something to be said for that, because there's plenty of lean years that I was able to just go over and use my own blood, sweat, and tears and fix that investment, which I couldn't necessarily do if the markets were down. Now, I'm not promoting not doing what we said before, but I do want to highlight the fact that it's an excellent strategy if you have the opportunity to get into an investment property. There are a lot of considerations if you do have a multifamily or any kind of commercial property, and this counts for some people are into strip malls or apartment buildings, office buildings. Any kind of commercial property, when you get into it, there's some great advantages to it. Number one, you're getting into the real estate market. Number two, and Sherri can attest to this, there is a depreciation schedule that's attached to that property that helps you offset some of your income. Am I saying that correctly, Sherri? All right. It can be used as a wonderful tax tool. And you get to enjoy a lot of those tax benefits in the upfront years. What I do want to highlight, and this is something that we probably should just touch on today, when you're ready to sunset that property and get out of it, we have a saying in this office: when you're tired of tenants, termites, and trash, because it does kind of wear on you after a while being a landlord. After 20 years, do I mind getting the call about the leaky faucet? No, not necessarily. But if the roof needs replacement, you get tired of some of that after a while. When you're ready to get out of it, and you were to sell it, say you're selling in this market, you're going to have a lot of capital gains tax to deal with. There's a net investment tax that you have to deal with. It's an additional 3.8, I think it is. And I won't get into the nitty gritty of that. And then there's what we call a gotcha tax. That depreciation that you do in the beginning years or throughout the years of your property, whatever that amount, say you've depreciated your house by $100,000, the government does a reach back, and there's 25% depreciation recapture that you have to face. So
such dirt bags.
It's tough, man, because especially for, I'll use myself as an example. If I'm looking at the equity that I've built in that house as part of what's going to fund my retirement, there's a big chunk of that can just go out the window on day one of sale. 35, 40%. That's a lot. And last I checked, I don't want to say something politically incorrect, but the government wasn't there when I had to replace the roof or fix the leaky faucet. So 40% seems kind of rich to me. You can do what's called a 1031 exchange. And that is an IRS tax code that's been around for it's actually the 100th year anniversary this year. And yeah, no problem. John has to get out.
That's great.
Thanks, John.
Thank you.
You can exchange that property for another property that is like kind. So you can go from one property that is a two-family here in Natick, and if I wanted to find an income property that was in Vermont and use it for part of the year as a vacation property, that's an option. But I guess what I quickly want to run to is there's another like-kind property that's acceptable, and it's called a DST, a Delaware Statutory Trust. If anyone out there has income property and wants to learn more about this, I would encourage them to call us and we can educate them on it. But what this is it gives you access to commercial grade real estate, that you become a part owner of a large real estate development. And it peels off an income on a monthly basis that looks and feels very much like a rent check. You also get a reset on a depreciation schedule. And so you can, in many ways, offset much or all of the income that's produced from that. And if you do this type of exchange, you get to defer the taxes until you exhaust that property, or it's an awful saying, but we say you can swap till you drop. If you keep swapping these properties until you pass away and leave it to your heirs, they get a full step up in basis. And what that means is they get that asset at the current value on the date of your death. So they don't owe any taxes on it, is what it comes down to.
And
so Sherri, you can probably help me if I missed anything on that, but I think you've recently done. Sherri knows quite a bit about 1031 exchanges. We know quite a bit about DSTs,
right,
and using those.
Right.
So is part of the reason of getting rid of a rental property, say it's a duplex, because at some point you don't have the tax advantages that you did when you initially purchased it, and that's why you're looking to buy a different property or kind of go this Delaware Statutory Trust
Sure.
route?
There's two reasons why you might want to swap.
Other than just tenants that are a pain in the ass?
Yeah. So swapping property for property, there can be many reasons to want to do that. Some of it is lifestyle. You might prefer a different location. There are some guidelines and rules that I won't bore you with right now. You can use that property for part of the year. You do have to rent it for the majority of the year. It has to be an income producing property. You might want to just simply swap markets. The market in Natick, Newton, Wellesley is super high, but you think that Dudley, Mass is the next up and coming market, and you can get more bang for your buck out there. So that would be some of the reasons you go property to property. Going property to DST is so that I can still achieve that monthly income flow that I've come to rely on, and not have to manage the physical property.
How about if you end up getting close to paying off your mortgage and you don't have the interest right off at that point? Would that be another reason, to finance a new property?
Sure, absolutely. Normally, just to be transparent, when people are looking to trade out of their investment property and into a Delaware statutory trust, it's because they are sick of the physical aspect of owning the property, and they're more interested in setting up a reliable income stream that they can. It's when someone's starting to wind down.
I think
so it's an excellent. Go ahead.
Well, and it's also like you said, it's a lifestyle choice too, or an economic choice where property values have inflated so much. You might have bought a house that you can sell and double or triple your money. Why wouldn't you do that? And if you can roll that into another asset and still, and maybe have an asset in another place that you'd like to be at that particular time, and be present in that market, it's a great decision in terms of being able to postpone and defer that tax gain when you do a Section 1031 exchange. It's one of the best tax breaks we have still on the books.
And that's with regard to capital gains. You'd be able to transfer all of them.
Yes. Yeah. You defer. Yeah. What you do is you postpone the gain into the newly acquired asset. So instead of having to pay the tax now, you reduce the basis in the new asset, and you wouldn't pay the gain until you sell the newly acquired asset. Or if you acquire another asset, you roll the gain into another asset. You can keep rolling.
Rolling.
All right. And then one quick question with regard to that, not to sound too morbid, but what did you say happens when you die and that gets passed down to whoever that's getting passed down to, as far as them being liable for whatever taxes?
Yeah, no problem. It's called a step up in basis. And what that means is if my asset is worth $1 million the day before I die, and I have $800,000 of equity in it, I still owe $200,000, and I have $800,000 that's equity. If I were to sell it that day, I owe taxes on that $800,000. If the next day I get hit by a bus, but I've left that, I'm sorry for the awful example, but you have to die somehow. So if the next day you pass away, that asset is worth $1 million, and you leave it to your heir, one of your children or something like that, they receive that asset at the fair market value on the date of death, as of the date of death. So if that house or property asset, whatever, was worth $1 million on the day you die, they now own that property or asset, and they own it at $1 million. So if years down the line it's worth 1.2 million and they went to sell it, they would owe taxes on the 200,000.
Okay.
That's why so many people, when they inherit a home, and if they sell it within a short period of time, they don't owe any tax because they've gotten that asset with a step up in basis.
Yeah. So so potentially somebody could be buying rental properties, and then basically buying a similar type of rental property, transferring those capital gains year after year after year, and then dying, passing that house off, and then that person there may be a wash on, if that house was paid for, there would basically be a wash on all of those capital gains.
Exactly. And from an estate planning perspective, it's an excellent tool when you transfer assets to heirs. Because
it's a huge strategy to build legacy and wealth. And so that's where, again, personally speaking, owning a 2-family house, and I will utilize the Delaware Statutory Trust when it's time for me to swan song. I'm not that tired yet, so I'll keep fixing faucets at the moment. But when it comes time, I will do the swap till I drop, because if you think about it, you can figure out a way for this asset to peel off income to support myself and my wife through retirement. But then when we do pass away, if we can leave that asset to our children, now we've left them the full value of that asset.
Yeah, without any liability.
Right.
I'm going to bow.
That's smart.
You going to sign off, Sherri? Okay, thanks for
Thank
coming.
you.
Thank you so much. Yeah.
Yeah, I know we went down a different path. I found that stuff super interesting, and
That's okay, and that's part of what I wanted to touch on too tonight was just that. Again, I know I keep saying it, but I sat in your seat for a lot of my life, and a lot of your listeners' seat. So I do know that cold feeling of being in the office alone.
Yeah.
And it's tough, and it's a rare breed, those who work for themselves. And sometimes we look like absolute brilliant heroes, and other times you feel like you're the dumbass.
Mm-hmm.
Why am I doing this? I don't have anything left to show for it. I think that's what this is all about, is thinking about the smart ways and the doable ways to start building something for yourself. You work hard. There's no reason why you shouldn't be paying yourself. And if that comes in the way of saving in an IRA, a Roth, or saving up and even pooling together and creating an LLC and getting an income property, Lord knows we're in a market in particular out here in the Northeast that while nothing's a guarantee, it's tough to say that the real estate market out here is a bad bet. And if you know it and you understand it, and that was my case, I was able to get into a 2-family. It was a depressed property. It needed a boatload of work, and there was a lot of pain in the upfront years. But aside from the the retirement plan conversations that we have, I'm a huge advocate for getting yourself, no matter what you have to do, if you can get into an income property. It's been one of the only right things that I've done in my life.
Yeah, and it's, I guess, being self-employed, you work your butt off for so long, and to think, that you work so hard, and no offense to the government, but for them to kind of double, triple dip. It's like when you buy a used vehicle and you go to the DMV and they collect sales tax on it again. And I'm like, how many times you guys going to collect sales tax on this single item that's getting sold and resold?
Right.
And you work your butt off, you maintain this property for so long. And I mean, like, the terms literally sweat equity, building sweat equity in these homes. And then, to have to turn around and hand over however much money to somebody who wasn't there throughout that entire struggle, especially being self-employed and not being handed money or being born into wealth, that's a tough pill to swallow. And I think
Really
that,
tough. Yeah.
if you're looking to pass money off to the next generation, and you're saving however many, potentially hundreds of thousands of dollars on a single property with taxes and everything else, that could go to your kids, or to whoever you're deciding to kind of leave things to at that point. I think that it's very smart, and it just kind of, it helps those people who are close to you that you kind of work so hard for in the first place to support, and help them get established.
I think,
Right on.
and I think that, full circle here, like going right back to something we talked about early on, it's like oftentimes, you know, when you're doing this alone, you do this income property alone, you do an investment alone, you end up not realizing that you are going to end up paying that sales tax multiple times, Tyler. You are going to end up paying all these penalties and fees. And that's what's most frustrating to this entire thing is that, again, the government, however we want to split this, like they've made it so difficult for the normal person, I'm going to say, to
Yep.
understand the right way to go about this. That, good, for you, it's great because like that gives you, that is your job, you know, and I would never I'm not saying I want to take that away, but I do think it should be more obtainable by more people because I think that the difficulty of it puts people in a position where they continue to, go in circles and struggle. And like,
No, I agree. We feel that way too. I mean, and part of that is the education that we do. Is I can't tell you how many times someone will come in and say, there's a difference between the guy who owns a 50,000 square foot office building
Mhm.
and someone like me who has a A2 family, and that's a big part of my retirement plan. And if I decided to pay the taxes on it, and I say, okay, I planned on capital gains tax, fine, I can calculate that. I know what that is. I don't like it, but I understand it. And I've done my math on that. But at the end of the day, there's another 3.8. We cheekily call it the Obama tax. It's the tax that was put in place, the net interest investment tax. It's 3.8%. That's extra. But the real gotcha tax is that 25% depreciation recapture. I can tell you that I didn't really fully understand what that was until I learned what it was. And we meet a lot of people who are ready to sell and they realize at the last minute that there's an additional, and I'm talking about sometimes hundreds of thousands of dollars that's coming off the top. But that is why this DST and 1031 exchange is such a viable option to do that swap out, if you will, because
Mhm.
you get to defer all of that and invest your full dollar for dollar and keep the government out of it.
Yeah, it's even we bought our house and it was farmland assessed and the guy
Nice.
subdivided. Um, so when we bought, he owned a bunch of acreage around us, and then when he subdivided and sold to us, they collected a rollback tax, which is basically they changed the use group from farmland assessed to regular residential. So now you're getting taxed on the house
Ugh,
and 3 acres rather than the house, and 1 acre plus the farmland. So when he went to sell, he had to pay, I don't know if it was maybe 3 years of back taxes
man.
on the property, at the rate that we were going to be buying it, which to me, it's the same thing where it's like, how much can you just dip into people's pockets? It's like they're getting free money. Nothing ever
Yeah,
changed. It was the same thing. We bought a house, and it's
right,
just crazy that that's going to come out of somebody's pocket on a house that they lived in and maintained for however long.
right,
It's
right.
you don't realize, and I think, if you work your butt off and you're looking to support your family, I'm all for, saving as much as you can and holding on to as much as you can.
Absolutely. Absolutely.
All right, Nick. Well, I know you have to run too. Apologize for being late.
That's
I
okay.
have my hands full.
That's
Oh, it
okay.
was really nice meeting you guys. This
Likewise,
was a pleasure.
this was not doubting you guys. It was more informative than I thought it was going to be because I
Oh,
I
good.
think
Well, good.
it's like I said in the beginning, it's an overwhelming amount of information and oftentimes daunting. But
Yeah.
you guys did a good job kind of outlining some of the important parts. But for the parts that you weren't able to touch on, where can people find your podcast and your videos and that
Yeah,
microsite?
thanks. Thanks very much. So we're at assetstrategy.com, and there's links there to our podcast area. There's links to informative videos. And I meant what I said. If you'd like me to, I'll set up a microsite and
Absolutely. I think that'd be super cool.
yeah, we want that information to be accessible to whoever has a question. It's free. Look, it takes a powerful person to ask a question and say, I don't know, but it
Mhm.
takes a wise man to listen to the answer. And so if you can get up the grit to ask the questions, we will give you the answer. We'll put up a microsite. I'll have it up by the end of the day tomorrow. That's how quick we get these things up.
Okay.
And I'll pick and choose some information that might be of interest to you guys in your listening group.
Okay.
But I'll figure out a way to put some kind of chat portal in there so that we get questions and we will answer them, and we'll keep that up there through the end of the year.
Guys, for those that are listening, we'll put the link underneath in the podcast description. We'll also share it across our social channels because I think this is important. Well, I know this is important, and I'd love to get some feedback once you guys do enter it. And maybe it's something we do more often, or maybe we have this as a regular occurring thing. It'd be great to really
Sure.
promote this beyond TikTok. And and truly put together some great information for everyone in this industry and beyond to take advantage of.
Sounds great, guys. Well,
Yeah,
it was
that'd
really
be
good meeting you.
that'd be great. I feel like so many people would definitely benefit from that.
And don't be shy with questions.
Yeah, do not be shy with questions.
Very good, man. Well, thank you so
All
much.
right,
Thank
you
you.
guys have a great night.
You as well.
All
Take
right.
care.
We'll see you. Bye-bye.
I think that it's interesting in many ways. One of the things that I find so interesting about it is also what can be so daunting about it. The amount of stuff that you would have to know,
Mhm.
and how much goes into it, and how many, I want to say loopholes, even though that's probably not the most legal term to be, as far as tax deferrals and all of that stuff. But that's why I think it's so important where like people ask you, how do you get involved with this? And it's just like anything else. And, I don't know what you guys spoke about when we first hopped on the podcast, but, or before I did, but when I hopped on, and it's like, you need to find somebody who understands this,
Mhm.
and then you can learn that way, because to look into it on your own or take a dive into this, it's going to be a very, very deep dive that can be overwhelming. And there's people out there that don't, take a small percentage of what you're making. They have your best interests in mind, and you can learn through what they're doing, and it's going to save you so much time. So instead of spending how many hours looking how to get into financial wealth management, hire somebody that you can trust and learn that way and work and make the money,
Mhm.
rather than taking the time to try and learn how to do this. It's just not worth it. There's people out there that have spent careers and are involved with people who have spent lifetimes learning this stuff and understand the ins and outs of it, and ask questions if you want to learn. But you don't necessarily have to have a full comprehension
Right.
of how all this stuff works. It's the same thing that we do, where you need to have an idea so that you're protecting yourself, so that you can trust the person and have a good relationship with the person on a professional level, on a personal level. But you don't need to know how to build a house, you know.
Right.
And it's the same thing with the whole wealth management, where you need to have an idea as to what's going on. You need to be present and make sure that things are going the way they need to be, but hire a professional who knows how to do this.
And one of the things I said before you did hop on is, and I didn't use the right word, but what I meant is ignorance. Like, people choose ignorance a lot, like code compliance. As homes get more detailed, like, oh, I didn't know I had to do that. They use ignorance to skate by, and I think that this is a very good example of how people remain ignorant against this, where they just choose not to learn it, choose not to
Yeah.
speak to people about it. And if they don't know about it, they don't know what they're missing. And, the more, I grow, the more my business grows, the more I talk to people about my future, my family's future, what I want to achieve. The more you realize is that this is not something, and many things are not something that you can just go into it alone. And to Tyler's advice, working with someone that has your best interest in mind. And yes, they get paid. That's the point of their career. It really is about working with someone that values your goals and is aligned with your goals. All right. So we get 2 reviews this week.
Whoa.
I know. And we jumped up a few ratings. I think one of them might be one of my guys. My new guy,
Works.
one of my new guys, Matt, wrote good stuff.
That works.
That's it. So that works, guys. You can do one word. Let's have a competition. Let's see how many one word. I just want one word reviews. Just like,
yeah, that's fine.
Great. Or like good. Let's see how no, I don't want to say as short as possible because then people just can put letters. That'd be super annoying.
No, words.
Let's go on iTunes, drop us a review, hit that 5-star, and below leave a comment. One word. Just one word. Best word
how you describe it.
How you describe it. Keep it clean ish.
Yeah.
Keep it nice. Not mean.
I think we can do better than nice. These words that you're describing our podcast with.
Well, I mean, like keep it in those categories.
Yeah. So I know we have another review to get to, but I met this guy through the Enduro club that I joined. And he works for a contractor. He's younger. He's 25. And he had just asked me, because he found out what I did and we were talking, connected. He's like younger guy, smart, like I would say responsible as far as, and I don't know him that well, but like responsible as far as being involved in construction. He wants to do nice work, wants to learn. But then he had asked me recently, how did I learn about financial investment and stuff like that? And I told him kind of how anytime I'd be willing to sit down and talk with him. And then I was just talking to him today and I was like, yo, listen to the podcast next week. We're having some financial planners and an accountant on. And he was like, oh, what's the podcast called? So didn't know about the podcast. So now he'll listen to this next week. And hopefully when he hears this, now he has to go on. So Dom, you have to go on iTunes and give us a 5-star review and then leave us a 5-star rating and then leave us a review. You can leave more than one word.
Yeah.
But I better see a review on there next week.
That's a call out.
Yeah.
So the second review from Seth Villa. Thank you, Nick, John, and Tyler for putting this on every week. I look forward to every Monday morning. I cannot get enough of how involved, meticulous, and different all three of you are. I came from the Toll Brothers production realm into the custom world this year, mostly on my own degree, but also because of how I hear the three of you speak. I wanted to be in a position where I truly loved and cared for the product I would create alongside the craftsman. I'm thrilled to see where my career takes me, and I hope one day to meet you there. Well said.
I assume a he, could be a she, is very excited for Monday, looking forward to Monday mornings. If we can do that for you, I feel like...
I didn't even think about how we make Monday morning better for people. I mean, that might be, speaking to our ego. Yeah, tune my own horn. But yeah, some guys listen to Sunday night. The last thing I want to do is listen to a podcast on Sunday. Usually that's the time I just chill and watch TV with the wife. But Seth, appreciated. That's cool to hear that you kind of change your careers around what we chat about on here. It's I don't know, that's cool. I think a couple years ago around this time we had someone that changed someone's life for the worse when they fired someone right before Christmas. So this is a much better review to read.
Uplift, yeah.
If you guys
We're all about positivity here on the Modern Craftsman podcast.
Absolutely. Oh, and it's funny that he says that how different we are. I was talking to Brad from AFT today because he's in Boston, and we were talking about how different you, myself, and Johnny are. And how we're just like everything, our personalities, our view on business, our businesses themselves. And I'm like, and I think that's why this is so successful, because we have very different viewpoints. I feel like we sometimes micro argue about things, which is, but it's great. You get three different viewpoints, and we're not, I'm tooting my own horn. I don't need Tyler and John to toot my horn.
Yeah, I feel like everyone takes it in stride.
Mm.
Normally, nobody tries to challenge my viewpoint because I'm like, I don't really care.
It's like, I'm gonna DM Tyler. He's like,
yeah.
no one's gonna. He's not gonna reply, man.
But normally, I feel like we take all of our own and separate opinions in stride. I don't think anyone lets it get to them that much.
Mm-mm. Well, guys, if you want to leave us more constructive feedback, hit the Survey Monkey on our Instagram. You know where to find us. And if you guys are in the Northeast this week, please come and join the folks at Duration this Wednesday or Thursday at the Lumber and Building Material Expo, aka LBM Expo, at the Rhode Island Convention Center. Show hours are Wednesday 10 to 5 and Thursday 9 to 5. Myself, Tyler, and John are going to be there Thursday. If you haven't attended a building and remodeling show in a while, this is a great opportunity to see what's new and readily available in the marketplace. So for more information, simply Google LBM Expo 2021. Hope to see you guys there. Podcast is also brought to you by Reno Run. So we keep talking about Tyler's encounter with them. He chats with them on the phone each week.
I haven't heard back.
You have that? You know what?
Nah.
I think they must listen to the podcast.
Maybe. Maybe somebody who's listening to the podcast was like, yo, leave him alone.
Yeah. I saw on LinkedIn this week that they are growing. So that means they're going to be expanding into more markets. If you guys aren't familiar with what this is, it is a product delivery app. Rather than spending, 2 hours driving to a hardware store to get what you need, hop on their app or on their website, place that order, get it delivered in, roughly 2 hours, sometimes or less. Bringing a fresh coffee along with it. If it's not in your area, go on their Instagram, hit them up, tell them that you need them in your area, and maybe they'll give you a sneak peek as to what markets are going to be breaking into. If you guys want free delivery, hit the podcast.renorun/Modern Craftsman, and they'll hook you up.
Yeah, I kind of feel like Reno Run needs to get like a sound bite for their company where it's like a beep and then a burnout.
You mean, yeah.
So,
I love that.
Like every time that we're like, this
what's it called?
podcast is brought to you by Reno Run, and then it's like beep beep.
A sonic brand. Yes. The sonic branding.
We need we need to get a mixer so we can start putting all of these sound effects into it.
Oh, that'd be awesome.
Yeah, like the radio DJs do.
Well, we used to have it where we could hit the woof. How did we do that?
Yeah, I don't know. You can get like an Arnold Schwarzenegger soundboard. That'd be cool. No, but seriously, they need like
a sonic brand.
Beep beep.
Let's work on that. You do the burnout. I get the Sprinter beep.
Yeah.
Because my Sprinter will not do a burnout. And if any of my guys are listening, be like, yes, it does. No, it does.
Yeah.
You should not be doing burnouts in the Sprinter.
Better not be.
Just replace tires on those. We don't need to do it again. All right, guys. We'll see you next week.